The other thing to keep in mind when you're thinking about, do I buy international bonds or do I buy Australian bonds, is there's lots of currency risk. So again, it's that part about, okay, I could buy some UK bonds and get 0.3% more by doing so. The issue is, if I do that, and this is over 10 years, 0.3% is a day's movement in the or less than a day's movement in the pound versus Aussie dollar. And so, you only want to be doing that if you're either hedged, or if you're going to, or if you're happy to take that currency risk. Keeping in mind that, if there's ways that effectively a lot of if you buy an international government bond fund, typically it will be hedged back to Australian dollars. So it will get rid of that. So they'll basically, they'll enter into contracts to sort of get rid of the exchange risk. And the net effect of all that is that the returns actually come out to be pretty close to the Australian yield. Like it'll be that plus or minus a little bit once you hedge out those currency risks. And so for a lot of investors, I say, look, why bother? Because there is actually, in my mind at least, a significant amount more risk you take on from buying foreign bonds. So even if it's notionally the same risk, say it's they were looking at Australia versus Canada, and it's assessed that it's largely the same. The risk of the Canadian government not paying its debts is largely the same as the Australian government not paying its debts, and that's fair enough. But the issue is, if as a retail investor, which most people on this podcast, I guess, or Australian citizens, I guess, with this, if they default, if the Australian government defaults, it is much more likely to default on foreign loans rather than Australians. Australian people vote, and they don't want that's sort of like the last resort. And so you see on most countries that actually default on foreign investors first, and then if things get really, really bad, they'll start thinking about defaulting on domestic investors. And so if I'm buying, say, a UK bond or a Canadian bond, well, let's say use UK, for example, and you get another sort of Liz Truss pops up and decides that they're going to, unfunded spending and all these types of things like that, and they have a default, they're not going to default on UK citizens first. They're going to default on Australian ones. So I've got the same return as what I would have got an Australian bond, but I run that risk. So so for me, besides really select opportunities, for most investors, I'd say just stick with your Aussie bonds, government bonds, and you're getting a similar return to what you would have if you're doing the foreign ones.
Nucleus Wealth, personalised portfolios for engaged investors.